Monday, October 10th, 2016. Monaco 64, home of alternative economics and contrarian views. I like to talk about cable or sterling. Cable is basically the exchange rate for the dollar in British pounds, and it's a term used in the foreign exchange market, cable. Not exactly why people call it that, but that's what it is. And the reason I want to talk about it is because the British pound has been in a one-way street for the last 100 years, which is normal, I guess, as the empire and the power of Great Britain or United Kingdom has declined relative to the United States. Well, first, before I look at some charts of the pound, I like to talk about how that rate was derived, and it's very interesting because it will discredit a lot of people who come out and say that gold is not money, that it's not important anymore, that it's been demonetized. Well, I'll show you. This is quite interesting. So here we've got $20 gold coin, or a double eagle, from 1904. So that's a $20 gold coin, 1904. That was what was used back then as money. I guess you could use a banknote as well, but that was $20. And this was just under an ounce. If you wanted an ounce of gold, it was $20.67. And here I've got, it's a 1963 gold sovereign, which was around in 1904 as well. Same weight. And this is still today legally 1 pound. So, and it's got 0.2354 of an ounce of gold. So if you take 20.67, let's say for all intents and purposes, let's say this is an ounce of gold, and let's say it's 20.67, and then you multiply it by 0.2354, you get around 487, which was the exchange rate for the pound back, in the early 19th century, before World War I, before the UK went off the gold standard. That was the exchange rate, 487, and it was derived from the different weights of the coins, and that was a pound, and that was $20. So that's how you got you needed basically 4.86 of these to get one of these. So that was $20, that was a pound. So that's why 1 pound was $4.86. So I'm going to look at a chart now, and I'd like to first say, because the technical picture for the pound doesn't look good, and I'm not trying to scare people off. I'm not trying to be end of the world or doomster. I'm just looking at things as they are. I worked in the city for 20 years as a futures and options broker. I use technical analysis and fundamental analysis when I was advising clients. I like to use both, not just one. And I have to say, looking at the technicals, long-term technicals for the pound, it is concerning. If I didn't know it was a chart of the pound, I'd still say this chart looks horrible. So let's look at the first chart. It's actually from a Bloomberg story. You can see it says pound's 100-year debasement, sterling's 2016 slide, latest in currency's downward trend. So you can see there around 1910 that we're just below 5, that 487 level I told you about. Then there was World War I. The pound was devalued, went off the gold standard, And then I think back in 1926, if I'm not mistaken, or 25, Winston Churchill, who was the Chancellor of the Exchequer, put the pound back, Britain back at the pre-World War I rate at 487. So you can see is that flat line that comes back. And that led to the Great Depression because the UK had printed a lot of paper money and didn't have enough gold to justify that rate. So again, there in early 30s, the sterling, collapses again to like 3.5, and then they try to put it back to 487. But then ever since the end of World War II, it's been coming down. And you can see there from the early 50s to around 1968, it actually held quite steady around 286. That was the Bretton Woods period. And then there was a devaluation in 1968. And then after 1973, we've gone free floating, which means there's no gold involved. But you can see how the rate we've got today has got everything to do with this. The £1.23 that we're now, $1.23 that we're now, it's remnant. It's derived from that old rate at 487. So why do I say the pound doesn't look good? And I think not only UK investors or UK savers need to look at this and consider protecting themselves. And I've said before, you can protect yourself with this gold. It doesn't matter if it's a sovereign. It could be an American gold coin as well, or silver as well. And now I'll bring up a more shorter term chart. It's from the 50s till today, and it's from tradingeconomics.com. So you can see that from 1958 to around 1968, during Bretton Woods, the pound was there around 286. And then we had the devaluation down to around 240, I think, in 1968. And then after 1973, it's gone free floating. So one thing that concerns me, if you look at the chart here now, the low in 2002, the low after the financial crisis, and the low in the early 90s was around 135, 140. And we've gone completely through that 135, 140 level. And I have to say, technically now, the next target will be 105, which is the low there. I think it's 1985, it got to 105. So that's the last line in the sand for the British pound versus the dollar. If 105 breaks, I don't know where we're going to go. But I guess 1-to-1 will definitely be a next target. I don't know how long this is going to take, but all I can say is that for British UK savers or investors, they still have time maybe to maybe protect themselves. I guess you could do it through investing in foreign currencies. You could buy some dollars, but I recommend precious metals. So, and what's that gonna mean for the UK economy fundamentally? Well, we're basically paying for the last 20, 25 years of a credit boom, of a housing bubble, for all the bailouts of the banks that should have failed in 2008. And it's going to be painful. We've already been paying for it. Our economy is not as robust as it used to be. Unemployment is still very high, even though the government numbers say otherwise. People are not earning as much as they used to. So I think it will just tend to get worse. But of course, there is opportunities in times of crisis. But people just have to adjust. I'm not here to advise people. I'm just here to tell you that there's something wrong. Well, not something wrong. It's just common sense. And the reason why the pound needs, is going to continue lower is because, as I said in the previous video about the balance of payments, about debtor nations, the UK is the second biggest debtor nation on earth. We've got $9 trillion of debt. I know that the net international investment position is not as big. We've got a deficit of about half a trillion pounds in that net investment position. But the only country that has more is of a bigger external debt than we do is the United States. And that's why I think this video is also important for my viewers in the United States and also countries like Canada, Australia. So the dollar is going to follow right behind the pound. The pound is just going first because we are, the pound is not the reserve currency anymore. It's at the periphery, but the dollar will adjust, and the dollar will have to adjust against this because all the other fiat currencies are going, and the only way for the reserve currency to readjust is against gold. So if you enjoy my videos, please like, share them, and subscribe to my channel if you haven't yet. If you'd like to donate, there are links below in the description. I'd appreciate it. Thank you. Take care.